The competition for which is the best fintech stock is heating up right now. And I don't just want to look at just the stock metrics. I also want to look at some of their, metrics that the stock is being based on. So today, that's exactly what we're going to do. The three companies in mind are SoFi, Nubank, and Block Incorporated. But really, we're going to be looking more at the Cash App numbers. Same thing for SoFi, by the way. Whenever we look at the numbers, we're going to be looking kind of taking out the tech platform, just purely looking at the banking side. Now, on the right hand side is the most recent quarter. You can see that SoFi has 7.5 million members, Nubank has 94 million users, and then Cash App has 56 million active customers. They don't cover their actual non active customers. That being said, however, we're also going to take a look at revenue per member, customer acquisition cost, gross profit, net income, and how smartly are they growing. Let's look at dilution at the end there. Why don't we take a look at the graph for members so you can kind of see how this has been growing along? Okay, so just on their actual customer counts, they are all growing extremely quickly. Nubank kind of taking the cake here. Cash App growing slightly slower, and then all the way at the bottom, SoFi. The most interesting part, however, and maybe this will take a magnifying glass to see, but whenever you compare it to the trend line, anything under this trend line is actually showing a slowing of growth as a percentage of how much it's growing, right? You can see that on Cash App, you can see that on Nubank. Whereas SoFi, they're actually surpassing that trend line, starting to see a lot of accelerated growth on their end. Now, you can see this based on their growth rates. SoFi is their highest in this blue line that's right here. And you can also see I compared all their numbers against each other. And so, the difference between Nubank and SoFi, this top number, is by far the largest difference in customers, but it is shrinking quickly. Whereas Nubank versus Cash App, well, Nubank is actually acquiring users much faster than they are. So, a couple interesting graphs. I'll let you guys pause that, take a look, but we're going to move on. On to revenue. Now, there's a couple things here that we don't necessarily need to look at, like total Cash App revenue. I know that seems like it would be a very interesting thing to look at, but it's also including their purchase and sales of Bitcoins. Now, whenever you're talking about the purchase of Bitcoin, they have to put on how much, Bitcoin they actually ended up purchasing on their revenue, even though they might have only held it for a simple millisecond. So you really want to strip away that actual Bitcoin costs and just look at how much profit that they made and count that as revenue and profit as well. Kind of taking out the Bitcoin costs. So we're going to be looking at Cash App revenue excluding Bitcoin costs, which you can see here. Massive growths in the most recent quarter, 10%. But anyway, whenever looking at these three companies, you can see Nubank still holds the cake in terms of the largest companies, and the growth rate is quite large. Whereas SoFi on the banking side ended up growing just a little bit slower than that, 6.8%, Cash App 10%. Anyway, let's graph it out. So this is the revenue trends for Nubank, Cash App, and SoFi. Remember that trend line trick that I was telling you about? Well, look at Nubank here. They're accelerating their revenue much faster than their actual consumer growth, which is actually showing them some pretty significant numbers like average revenue per user that we'll take a look at later. Across the board, these companies are accelerating growth rates. Cash App looked to be slowing down last quarter. That's not the case today. You can also see the differences between all three of these and how they're growing. Also very good. And then also just sort of a full breakdown of all their charts, including their growth rates. If anyone wants to pause there, you can take a look at that. Okay, going on though, because it's going to be a lot of content. We need to go quickly. Revenue per user. So a little bit of a different story here now. SoFi, because they really deal in a lot of lending, has by far the highest lending side. Whereas Nubank, oh, and by the way, I've stripped away, like I said, the tech platform. This isn't obviously including parts of the business that have nothing to do with it. Same with the Cash App side. This has nothing to do with Square or anything like that. And it's also stripping away Bitcoin's revenue as well. Well, not their actual profit, but just the cost of buying and then selling the Bitcoin right after. Okay, and then Nubank also growing extremely quickly, but actually at the lowest in terms of their real numbers. Whenever comparing back to the earliest of Q1, actually, I think it goes further than that, Q4 2020, uh, SoFi was actually back at $88, Nubank at $5.23 or 26 cents, and Cash App at $12. So there's been massive improvements in Cash App and Nubank, but actually slower in SoFi as they pivot from, you know, very high amounts of lending and now getting more into financial services, which is still a good thing. But whenever you try to break it down on a per member basis, obviously it's not going to look the same. So here are the charts. I'm not going to speak too much on them. As you know what to look for. Purple's Nubank, the green is Cash App, blue is SoFi being by far the highest. In terms of the growth rates, this is where it gets really interesting. Cash App, Nubank really holding up the a lot of the growth. SoFi actually been coming down for the most part. And then the differences between these companies. So, SoFi versus Nubank. SoFi used to be, over 11x how much revenue they bring in. Now they're only about, you know, 2.5. Actually, that's also including SoFi's 100%. So I actually think it's a little bit less than that, but still. Now, customer acquisition costs. So, SoFi's customer acquisition cost most recently was at $284 per user. Okay. Nubank at $14.86. And then at Cash Apps, I also redid this from the last video that we did. This is, purely looking at Cash App sales and marketing expense, stripping out any sort of expenses for, Square, and only looking at their new member additions on their actives. So it's a little bit jaded to the upside because obviously you're not going to see people who aren't actively using the app, but they don't give full customer counts. So it's as best as it's going to get. Visualizing all this, we can see, and some of these things are all scattered around, but these are the customer acquisition costs. Nubank being this tiny little number at the bottom is the lowest customer acquisition cost for any fintech globally. And in fact, it actually raised quite a bit from quarter over quarter, $8.60 to $14.86 as they try to find the last remaining, 40 to 30% of members that don't use Nubank in the Brazilian region. But anyway, customer acquisition costs to average revenue per user, you can see how quickly a company like Nubank can bring a client on for $14 and end up paying them off because the monthly average revenue per user is actually higher than what they're actually bringing on a user for. And actually, sorry, I said monthly. I meant quarterly average revenue per user. So they pay off their members quickly at about 170%. Before, at certain quarters that they've had, it's been as high as almost 500%, which means a single client's quarterly revenue is paying off the new addition of 5 new members in a single quarter. Whenever we look at the different trends, you can compare Nubank to Cash App or Nubank to SoFi or Cash App to SoFi. I'm not going to go through every number. Sorry, that bracket was bothering me. Not going to go through every number, but you guys can go ahead and pause that, and then we'll move on. Gross profit is a new addition to this chart as well. So SoFi's gross profit is only taking a look at their banking side. Nubank is all financial services and banking, so it's a little bit jaded to their outperformance. And then Cash App's gross profit is also only on the Cash App side, and then all of their margins that go with it. So whenever we look at this, we can see gross profits for Cash App and Nubank really skyrocketing. SoFi, however, in the most recent quarters are doing much better than their trend line has been showing recently, but still much further behind. It's not like Nubank isn't skyrocketing past their trend line in the most recent quarters as well. So a lot of outperformers from Nubank and SoFi in this one. And you can also see the differences between all the different companies and how they've been growing as well. All right. So SoFi, actually, if you take a look at their margins, by far, very, very exciting margins, much higher than a lot of the other competitors. And the trend line, unlike this purple one that's kind of staying flat for Nubank, SoFi continues to increase their margins over time. Net income. Well, we can see SoFi's net income for the first quarter actually broke profitability at $47.9 million. And all before that, all pure negatives across the board. Same thing for Nubank. Okay, they were negative across the board until They just broke profitability, and then the margins just kept skyrocketing. So they're actually now bringing in $360 million in Cash App, or well, we can't see Cash App's net income, so this is the full company. Same thing for SoFi, by the way. That's inclusive of their tech platform. But in Block's side, they also broke a net income positive quarter in the last quarter, $157 million. And all before that, extremely large negatives before that. And then back whenever Bitcoin was doing well again, they were also printing some real money back then. Let's visualize that out for a second. So this is just their net income visualized, as well as the margin trend line, or the margin lines as well. Nubank showing a clear dominant space in this one, printing real dollars for the company, bringing it down to the bottom line. Awesome stuff. Okay, so for dilution, we're looking at stock-based compensation as well as stock-based compensation as a percentage of the total revenue. Okay, so what we can see, SoFi most recently has been bringing down their total, stock-based compensation much lower than what we used to see back in the day, especially as a percentage of revenue. Like Q4 of 2021, 27%. Now it's 11%. However, whenever you compare this to someone like Nubank, where they're giving away 14% back in the day, which is still very easy to stomach, especially at the time. Now looking, you can see that the number is at 2.35% of revenue. Extremely, extremely great, considering even the dollar amount is some of the lowest rates since they've been a public company. And then as a percentage of revenue, it is by far the lowest. And then on Block side, same thing. We're starting to see a turnaround. They're bringing the numbers down 9.8%, but it's definitely been slower to get there than companies like Nubank and SoFi. But still, as a sheer dollar amount, it is still less than SoFi's as well. So this is how you can visualize stock-based compensation as a percentage of revenue. Blue is SoFi, green is Cash App, and then all the way down at that very bottom, if you can barely see it, is that purple Nubank. By far one of their best metrics that they can show off. And then if you want to look, all three of them right here, that's their stock-based compensation for each, total dollar amounts, and then as a percentage of revenue. Okay, going on. So we've looked at all of their metrics comparatively, or at least the parts of the companies that we can directly compare. Now I want to talk about valuation. Valuation for these three companies, this is where things get interesting. Now, market caps. Nubank and Block are in a completely different realm than SoFi. Okay. However, they are more mature. Forward PE ratios much, much lower than the quote unquote very expensive SoFi. Okay. Price to sales ratios actually being highest in Nubank's field, just a little bit lower than that, or sorry, the actually lowest right now, Block at 3.76. And then SoFi, obviously, there's no weird accounting metrics. It's 4.07 as the price to sales. And then price to book. Now, SoFi by far the lowest, still high considering, whenever you're comparing directly to other banks, but 1.7 times. Nubank, 8.3 times. And then Block at 2.56 times. Now, if you guys know my favorite metric of all time, Peter Lynch's favorite metric of all time, the PEG ratio. This is their price to earnings ratio, including their growth on their earnings. So price to earnings growth ratio. This is where you can include a little bit of potentially your own metrics or Wall Street metrics. What I'm taking for these three is just simply Wall Street's average estimates over the 3 to 5 year mark for these three companies. So SoFi, 0.72 times, Nubank, 0.85 times, and then Block actually the most expensive at 0.97 times, but yet all of them under 1 times, which is the indicator that these could potentially be undervalued companies. Now, held by institutions and held by insiders is a very interesting metric across the board because SoFi is not getting any love here. 40% institutional holdings is an absolute joke. Whenever you consider that they're also by far the highest shorted company on this list at 16.2% of outstanding shares versus Nubank or Block that have less than 3%. This company is just like hated right now. Now, on the insider side, we're also seeing some great metrics, right? Nubank, extremely high percentages versus SoFi or Block. But still, these are the three companies, and comparatively to which type of class of person is owning the company. Right now for SoFi, it's a lot of retail holders like me. Total cash, total debt, 3.09 billion for SoFi. Really, total debt's 5.35 billion. Now, remember, these are banks. A lot of their debts are actually, used for their own operations, used for lending out capital, these sorts of things. So it's a little bit different. SoFi actually has more cash than they have debt, but still, I'm just trying to keep it as baseline and accurate as possible across the board. So we're just looking at total debts, because they're not the only ones that's going to be facing that sort of issue. Obviously, Nubank and Block both have similar issues as well. But these are their cash and debts as it currently stands. Nubank sitting at a very comfortable 6 billion, 1.4 billion in debt. Block 6.25 billion in cash, 6 billion in debt, holding it very close to the chest. But that's the video. That's what we like to do here. Let's take a look at the numbers. Let's try to visualize it to help understand it. And then let's look at the valuations for what you're buying. If you guys like this sort of content, make sure you guys subscribe down below. But aside from that, thank you so much. Bye for now.